Welcome to another great video here that I'm going to share with you 5 excuses that most people are making to not invest their money. So if you're delaying your investments, stay tuned and I hope to open up your eyes a little bit in this episode. All right, so when it comes to investing, a lot of people are putting things off further and further away to getting the ball rolling on their investments. Investments are really a great way to build things up so that way you can have some money later on towards retirement, or at least grow your money. So if you have $50,000 sitting in a bank, it's probably not accumulating anything and you're actually losing the value of that just due to sheer inflation. The bank pays you a very minimal, small percentage. So you need to be putting that capital to work, known as kind of working capital. And a lot of people, what they do is they kind of put those things aside. So in this episode, we're going to share 5 kind of main reasons and things that people say, hey, I don't want to invest because of this. And I want to open up your eyes so that way, hey, if you're saying some of these things, you might want to get over the hump and take some action. So we're going to start out with number 1, and that is, I don't have enough money. So contrary to common belief, you don't need a ton of money to get started with investing. Just start small and focus on learning first. And you can find the funds later to get a little more bigger. For example, taking things out more on loans, which isn't always the smart approach, but as you get a better job, you might be able to go in and start putting more money into the investment world. So here, I want to share with you a little insight on, this is investor.gov, government website. Let's say you start your initial investment of about $500 monthly, contributing about $100 for 25 years, estimated interest rate of 8%. And then what we'll do is compound frequency annual. In 25 years, you'll have $91,000. So as simple as that. You can see here's kind of the chart and graph, total contributions versus your growth. It's quite a nice return. Again, you're looking at many years to come. If you're thinking of the longer picture, it's pretty fantastic. So, it's really something to think about as you look to further down the road. Like if you don't think you have a lot of money, just putting a little bit forward can start the ball rolling. All right, let's check out number 2. And number 2 is, I don't have the time. People say, I don't have the time to invest. If you see investing as a priority, you will find the time. You'll find the time to learn and practice. And there's a ton of investment strategies that don't require more than a couple hours a week to manage those investments. So again, we talked about this annual contribution or monthly contribution thing. And remember, you could do things that are automatic. So if you go to like TD Ameritrade or any of these broker platforms where you deposit money, you could set them up on a monthly basis, weekly basis, bi-weekly basis. You could do these things and set them automatic in the same way that you do bill pay. So there's no excuse there. It's all automated. It'll come out of your checking account or whatever the case is, and it's just automatic time and time again. So if you're saying, hey, I just don't have the time, that's just really a boring excuse that people are using to say, hey, I'm just going to put off my investment. Okay, this next one here, number 3, is I don't know where to start. And I do see, hey, this could be a bigger issue. Now, there's a ton of free and paid resources online. Do your research, find a great teacher, and start learning. And in fact, we have a website. This is more dedicated to like full-blown trading though, trading more on options. So a little more advanced than for the average viewer. So I have a website called tradersfly.com. And if we pull this up, and we go to this website, I just want to show you that, yeah, it is a little more advanced for people who are really serious about kind of investing and taking things deeper. And I want to show you one of the courses that I also have. Again, you don't have to buy this course. You could look through the free material. But if you want to learn about like passive dividend investing, you're just kind of wanting to touch base on a lot of different strategies, here's 14 videos, 12 hours of training for $400, and you got yourself a really good education. I'd say probably better than most books right here, on screen and everything. And if you look at all of these things, we go in depth, right? It's not like a 45-minute or a 2-hour course. It's in depth. Now, there's a lot of other classes that I do that's more advanced on investing and trading and options trading, which is way beyond the scope of a lot of the videos that I make here on this channel. But this is exactly what I really do as a core. The channel right now that you're watching is kind of like the little stuff that I do. So here in this case, we're focused on very active trading and investing. Anyways, my point is you can start out with books. There's a ton of books out there. There's a ton of courses out there. Just start with 1 or 2. You might spend $500 on your investment education that first a couple months or a year or two, and you'll get a lot of knowledge there, and that's going to get you started quite a bit. And then you'll see which direction or path you kind of want to get into. Maybe a little bit more active investing, maybe less active, more passive, more dividend, more stocks, more ETFs, more target date funds. Again, everybody's going to be a little different, so don't let anybody push you a little more this way or that way. Kind of get an education, get an understanding, and then you'll see what kind of fits in your cube or block. It's kind of like those puzzle pieces. What fits for you? All right, let's hit number 4, and that is I am too young or old. Now, the best time to plant a tree was 20 years ago. The second best time is now. So this is a Chinese proverb. So anyways, there's a lot of people that say, hey, maybe I'm just too young. I don't need to invest right now. Or I'm too old. I've already missed the thing. But the reality is 1 in 4 investors started young, saving for retirement. This is, great. If you can start, the sooner you can start, the better off you'll be. So here's a couple, again, stats from different websites. In the US, 26% began saving for retirement before age 25. The average investor started saving is 29. 7 in 10 investors think they could save more if they tried. So again, if you can start sooner, that's ultimately better because you'll just have more of that curve. If you start a little bit too old or later on, you don't have that curvature for the compound effect to start taking shape. So your money doesn't get a chance to kind of work, and then you accumulate more money. It's kind of like getting more employees to work for you. So be a little bit more careful there. If you start a little too late, you got to really make it up in the back end. Whereas if you start younger, you could kind of coast a little bit at a slower pace and still be just fine. Okay, let's check out number 5, and that is it's too risky and I can lose money. And risk is just part of the game. Look, just by walking outside your door, you are at risk of catching a cold, at risk of getting hit by a bus. You've got risks all over. Money is going to move up and down. So you got to really only invest in things you can only afford to lose. So when we talk about this in trading and investing, there's a lot of different things that, hey, if we put on a trade right here and we put on a spread, again, probably beyond the scope for most people here, but let's say we put on a spread and we go into Boeing, we're doing some option trade, even some complex stuff. I got to be able to take the hit of this full position. So I might do something as simple as a single contract here, risking aiming to make $164 on 836 in the next 20 to 30 days. But the cool part about this is this can stand still, it can move up, or it can pull back to this price, 190, and go higher, and I can still make my full investment. $164 on about 1,000, that's pretty good percentages, right? 15 to 14%. So, but these are dealing with options, more complex spreads, but I got to be able to take the full hit of that 836 if need be. Right. So anyways, my point is that the risk part is just part of it. Whether you're buying shares of stock, so even if you're buying things like a Disney and you're taking a look at this right here where the stock is at $151 at this exact moment. So here's Disney. If I buy 100 shares of stock and this thing goes up, yeah, you can make some money. But on the flip side, if it pulls back, yeah, I could be losing $1,000 here or $2,000 here if it's pulling back quite a bit. So that could be a big issue and a big problem. So be mindful that, yeah, this is just part of business, part of risk. Money is going to come in and out of your account, just like when you pay the water bill, the electric bill, the hydro bill, the telecommunications and phone bill. It's coming out, but that's just part of life and living life. And it does take a little bit of heart and courage to kind of get over that hump, train your mind a little different, get over that fear factor. So I totally get it. Especially if you don't have a lot to invest, it takes time to build up that courage. So you can do that through more education, through learning, through doing practice trades on paper trading platforms, which are just simulated fake paper money. And that helps build up some of that courage as well. So anyways, I hope you found this video helpful and you got some insight on kind of these 5 main issues that people have and excuses that people make to not invest. And maybe it pushes you over the edge to invest a little more money so that way you can grow your account. I'm not saying you got to be a millionaire in 5 days or anything like that. I'm just saying, hey, take the initiative to start. So whether you start by reading books, watching videos, getting a course, or taking that next step to opening up your account, just putting in, $100 here or there. Take that next step to, get your life, financial area of your life in the right way or in the right direction. So thanks for joining me. Hope you enjoyed this video. Feel free to check out some of the other great videos I have on the website, or check out our other website and channel, tradersfly.com, if you really want to get into more investing and trading actively. I'll see you next time.